Apparently, hedge funds are trapped once again. Do you remember the big GameStop squeeze from a few years ago where it went from like pennies a share to hundreds and hundreds of dollars a share? Well, apparently that's happening again. Now, this stock that we're looking at right here is actually VRT, which is something that's going on in the AI space right now. VRT is one of the stocks that I'm monitoring. It seems like it's getting a lot of attention out there. And I am a professional investor. I am competing in the US Investing Championship. And we're going to watch this video together called Hedge Funds Are Trapped Again. These three stocks could explode. I don't know if VRT is going to be one of them. Possibly. Who knows? But let's watch this together and see these three stocks.
Ever heard of a short squeeze? It's one of the scariest things that can happen to a hedge fund and one of the most profitable opportunities for regular investors. The short squeeze was made.
I would also say that if you're on the wrong side of a short squeeze as a retail investor, it's also very scary, right? It's also very scary. Let's take a look at GameStop real quick during that big old huge run, right? Imagine you were the guy, because there were plenty. Imagine you were the guy, because no girls would have done this. They're smarter than us. They're smarter than us guys. We all know that. My wife especially. I don't know if I've ever told you this, but she was valedictorian of her high school. I love smart people. If you decided to get in the way of the short squeeze, even as quick as it was, right? We're talking the span of, let's say January 13th to January or February 4th, right? This 3-week window right here, things went crazy, right? Now, of course, it was so small, you can't even see it over here on prices. But if you decided you were going to be the smart guy who went short on this to say, oh, I know better than the market, you got destroyed. You got absolutely destroyed. Your broker called you up and said, you have no idea what you're doing, but this is what a margin call feels like, buddy. Pay up. I don't want that to happen to you.
Made famous in 2020 when Redditors piled into GameStop. The stock soared
actually 2021, but yeah, same thought.
9,800% in a couple of months, turning a $5,000 investment into nearly $500,000. But believe it or not, GameStop was not a one-off event. Short squeezes take place all the time.
And if you want to think about it, right, we talk about the market cycle a lot because it's real, right? This is very fast market cycles, very fast market cycles. In fact, during this exact time, not AMD, but AMC, I actually was on TV. I've been on TV far too many times, probably 200 times, talking specifically about AMC. Let me remove this object real quick. There we go. AMC during that time, because man, I made a buttload of money in a short amount of time, and it was awesome. They've done some reverse splits, it looks like, since then. But yeah, I traded this one. Went on Yahoo Finance and was talking all about this. It was a grand old time if you were on the right side, right? Remember, stage 1, stage 2, stage 3, stage 4. It was a great time. You run that big, beautiful trend up, that stage 2 trend, everybody feels like a genius in the bull market.
They may not all go up 100-fold, but 300 to 500% moves are quite common. Today, I'm going to show you how and why they work. I'm also going to share 3 stocks setting up in potential short squeezes that could deliver huge gains. These are stocks with that perfect combination of a lot of the shares sold short and a stock price that keeps on making new highs. Now, a lot of people don't realize you can make money when stocks go down. The process is known as short selling. Here's billionaire hedge fund manager Bill.
In fact, I remember, so I had already completed my MBA, and I was working in consulting, and you know the story of the guy who tries to be so smart, and he's like, oh, tell me the option pricing model, right? He and another colleague of mine were discussing Deutsche Bank, and he's like, hey, if you're so bearish on Deutsche Bank, just go out and buy puts on it. And that was like my gateway into like trading options, like that very moment. But that was also a realization for me, like, hey, I actually can make a ton of money as the price of the stock goes down, because, you know, you kind of forget about those things, right? You learn about it in business school, you go out into the work world, and you forget about things you learned in business school. And it's like, oh yeah, I can make money as the price of stock goes down, right? So by all means, if you're one of those people who likes to short stocks, you got the opportunity any day of the week.
Bill Ackman explaining how it works.
Imagine for a moment that a friend of yours collects rare coins, and you have the view that those coins are going to go down in value. So the way you would short those coins is you call up your friend and say, can I borrow a few of your coins? And he says, sure. And you borrow the coins. You then sell them for the $1,000 each that they sell for in the market at the time. And then you wait for them to drop in value. and you turned out to be right, and the coins dropped in value to $500. You go back into the market, you buy them back for $500. You've sold them for 1,000. You've repurchased them for 500. You've made $500 in each coin, and then you return the coins to your friend. Your friend is in the same place he was when he started, and he has the same coins that he started with. You might have to actually pay him something for borrowing the coins because he loaned them to you. You might pay him an interest rate, so he's happy because he's made an interest rate. It's made interest lend you the coins. You've made money profiting from the decline in the value of the coins, and that's short selling.
That is by far the best description of short selling I've ever heard. I've never ever explained it as well as Bill Ackman did right there. That was a perfect description. Well done, Bill Ackman. Golf claps all around. That was actually really, really well put together.
That's when it works.
Yeah. Chiapoulos said the exact same. That is the best description I've ever heard as well.
When it works. But what about when it doesn't work? What if you sell it and the stock goes higher? Because the stock can go infinitely higher. You could lose 3, 4, 5, 100 times more than your initial investment. In 2020, the hedge fund Melvin Capital shorted 50 million shares of GameStop at a price of around $1 a share. They were betting the company would declare bankruptcy and go to zero, which was the general consensus at the time. So a bunch of retail investors on a Reddit board, Wall Street Bets, devised a plan. If they pooled their money and all bought the stock, they could drive it higher. If the stock rose from $1 to $2, Melvin Capital would lose 50 million bucks. They pushed it all the way up to $5. The hedge fund's $50 million short bet quickly turned into a $200 million loss. And this is when things got interesting. Because in order to get out and cut their losses, they would have to buy. With a traditional stock investment, you buy to enter the trade and sell to exit. But with a short, you sell to enter and buy to exit. This would add more fuel to the fire, bring even more buying volume, and send GameStop stock even higher. So instead,
right. So it's a self-fulfilling prophecy, right? That is what trends are. Trends are self-fulfilling prophecies. Let's go back to GameStop and let's zoom in a little bit here. Right, trends become self-fulfilling. Yeah, remember the market cycle is totally real, folks. This is the market cycle. I'm sorry, not the market cycle. Efficient market theory. The markets are totally efficient, right? Because nobody trades based on fear and greed. Nobody. That would be illogical, right? And investors are logical people, right? Right? Yeah. Again, anybody who's ever said markets are efficient is poor. I didn't say that. Mr. Larry Hite, one of my mentors, said exactly that. Hang on, right here. No, this one. I've noticed that everyone who's ever tried to tell me markets are efficient is poor. Perfect example how inefficient a market can be, right? Perfectly example. Okay. So it's moving like gangbusters, okay? And then rocket ships higher. Why is it rocket shipping higher? Okay. These people over here heard about this great investment that other people were making. So they piled in, which caused the price to go up. Then they told their friends about this great investment they're making, and they piled in, which caused the price to go up. This is the self-fulfilling cycle of trends. And then they told their friends about how much money they're making, and so their friends piled in, and it caused the price to go up. Now let's add an element, okay? So you got the greed factor on top of this, okay? Remember, we're talking just greed here. GameStop had, and I don't know the numbers now, but I remember hearing GameStop had some sort of like an ungodly huge short position on it. Okay. Tell me in the chat, because I don't remember. But imagine it being somewhere in close to like 80%. 80% of all shares being shorted. Okay. Now, they're losing money hand over fist. Not only are they losing money hand over fist, they have an unlimited loss. As every single day the price goes up. Oh, it was more than 100%. That's right. It was more than 100%. Every single day that it goes, and of course, how did that even happen, right? Every single day it goes up. They're looking at this and they're like, ooh, this is not good. This is not good. You know why it's not good? Because from $1.50 to $3, they've already lost the entirety of their investment. That's 100% loss. But don't worry, since we're shorting, it can go a lot worse. And let's say it goes to $4.50. Oh no, that's 200% loss. Oh no. And then it goes up to $6. Oh no, that's a 300% loss. And yes, in this case, you can lose more than you invested because when you buy a stock, the worst thing that can happen, it goes to zero. If you short a stock, the worst thing that can happen is it goes to anything higher than what you shorted it for. Okay. Oh boy, we're only up to $6. Now imagine you had a short position and it climbed all the way up to, let's see if I can drag this correctly. Imagine you had a short position, initiated $1.50, and you held it to the top up here to $120. That is a 7,700% loss. Now, I don't know if that happened, but the math is telling us this. You shorted at $1.50, holding it all the way up to $7,700 is unbelievable, right? So you, as the hedge fund manager, you're like, I'm not going to have a 7,000% loss. No way. So you have to buy back the shares, right? So remember, everybody's piling in. This is how it worked, right? Everybody's piling in. You, as a hedge fund manager, like, I got to get out of this. I got to start liquidating. How do I liquidate a short position? I have to buy the shares. If I'm buying the shares, you're buying the shares, Ross is buying the shares, Sheetal's buying the shares, Woody Woodmanson is buying the shares. Everybody's buying the shares. There are no sellers left. What do you think is going to happen? What do you think is going to happen? In the chat, put a rocket ship emoji. Because that's exactly what happened. That is exactly what happened. There is no possible way that prices are going to go down. Highway to the danger zone. Yeah. There's no possible way for prices to go down because nobody's selling. Remember what I say about all-time highs? What do I say about all-time highs? Put it in the chat. What does this random guy on the internet say about all-time highs? Right? Everybody's putting rocket ships in the chat. They hadn't had a chance to put in all-time highs just yet. What do I say about all-time highs? It's bullish AF. Hella bullish. Yeah, exactly. This is why everybody is stoked they're making money. Then, who's on the other side of the trade? Any shorts, they got to bounce. They got to bounce. And what happens when they bounce? They have to buy. It pushes the price up. You're happy because you're making money. You go tell your friends they want to make some money. And then rocket ships, baby, all day, every day. Isn't that cool? This is a great example of what trend following can look like. Now, does it always happen this big and aggressive? No, of course not. Right? We can look at, I'll actually look at the greatest stock in the history of mankind, SoFi. That's what happened over here. People got excited. They shared with their friends. Shorts had to cover, pushes the price up, et cetera, et cetera, et cetera. I don't know how much short interest there was in here, but I bet you if there were any shorts, they had to cover all the way up because it went from, let's just use this level here, 842 up to 1719. So it would have been a 100% loss for them had they held the shorts all the way up. Do we get it? Everybody make sense? It all makes sense? If it makes sense, throw a thumbs up in the chat. Throw a thumbs up in the chat. Let's keep going.
Instead, they doubled down. They kept selling while the public kept buying. And their hubris eventually cost them a $2 billion loss. But this is a short squeeze. It's why selling short is risky. Now, it doesn't always work out this way. Most stocks being sold short are terrible stocks. There is a reason
all stocks are bad. That's true.
Hedge funds are betting against them. Groupon, for example, has a 44% short interest. I didn't even know they still existed. But every once in a while, these funds get it wrong. And when they do, Wall Street loses. And savvy retail investors can hit it big. Take Lulu's Fashion Lounge, for example. Ticker LV.
So if you are an astute trader, if you're an outlier, if you've made any money in the market, right? The easiest time to make money buying is the stage 2 uptrend. Everybody feels like a genius in a bull market, right? The easiest time to short is in the stage 4 downtrend. But what happens is a lot of people with their fear and their greed running out of control, they start shorting up here saying, there's no way it can go up any higher. There's no way it can go up any higher. There's no way it can go up any higher. Right? Then they end up losing bigly on the trade. And when it finally comes down, they got no money left. They got no money left to short it on the way down. And then they're screaming, I was right. I was right the whole time. I knew it was going to crash. And it did, but you ain't got any money left to bet behind that because you decided to get ahead of it. You wanted to be the guy to call the top. You can see the direction of every stock out there using the OVTLYR trend template, the 10 over the 20, price over the 50. Or to make it even easier, you can just go into OVTLYR. It automatically does that for you. Like for HIMS, on example, has a pink background, which shows you it is in a bearish downtrend. There's no mental effort at all. Just pink downtrend. Okay. By the way, this stock looks terrible. Oh, if you are a HIMS shareholder, you're probably not a very happy shareholder. In fact, let's go look at HIMS real quick, right? You can see just how fearful it's getting. Remember, markets are not efficient. There is no way that the efficient market theory is going to say, yes, it makes total sense. It makes total sense for this to trend down from October to today, 68%. No, of course not. Of course not. The likelihood of that is a 4 standard deviation move. Okay, sure. That's a once in every 10,000 day scenario setup. Okay, sure. But it happened. I guess it can't happen ever again on this stock ever in the next 10,000 days, right? Right. Anyways, OVTLYR does that automatically for you. Right. So let's keep going.
LU. Last month, the stock's short interest, the percentage of its shares being held short, hit 42%. Investors were betting big that this stock was a dog. But on January 12th, that all changed. News broke that the investment firm Friedland Enterprises had taken a 5% stake in the company and was working to turn it around. Investors piled in. At the same time, short sellers ran for the exits. And this combination of heavy buying from investors getting in and heavy buying from short sellers trying to get out.
That's what I said.
Caused a massive spike in Lulu stock. Shares skyrocketed from $6 to $30.
Wait. Hold on. Did you say Lululemon? Hold on. He may have actually had the wrong chart up there. Is it LU? Yeah. Oh, he had the wrong chart up there. Unless I'm wrong. LVLU? What is LVLU? Lulu's Fashion Lounge. Oh, okay. Look at that. I learned something. I thought Lululemon was what he was talking about. No, it's Lulu's Fashion Lounge.
Hold in. At the same time, short sellers ran for the exits. And this combination of heavy buying from investors getting in and heavy buying from short sellers trying to get out caused a massive spike in Lulu stock.
And remember, everybody who bought it down here, they're so stoked. They're so happy. They're telling all their friends. Everybody who's over here is also screaming how smart of an investor they are. Their greed is off to the charts. And then anybody who's short this, they're screaming, I gotta get out this as fast as possible.
Shares skyrocketed from $6 to $32 in just over a week. It was a perfect short squeeze. And traders who were paying attention were able to quickly quadruple their money. Now, all of this is publicly available, by the way. You can see which stocks have high short interest. Stockanalysis.com has a most shorted.
Tell me in the chat, do you use this? I'm curious. Put a thumbs up in the chat if you do use it, or a thumbs down in the chat if you don't. I'm just curious. I'm just a quick poll. Thumbs up in the chat if you do use a shorted list. Thumbs down in the chat if you don't. In fact, let's go to LVLU. Let's see if we cover this. We cover 9,000 stocks in OVTLYR. Yeah. Oh, look at that. Tell me that's not awesome, right? The buy signal on OVTLYR came on January 8th on LVLU. Let's go look at that. That's actually pretty sick. All right, January 8th. Here, look at this slug of volume. Huge slug of volume that came through right there. Okay, boom. Huge move up. Was it even around earnings? No, not around earnings. Sell signal came one day after the top, January 23rd. There you go. That is sick, right? And then, of course, you can see right here how it blew through this order block. So between here and here, a 300% gain. I don't know. I feel like that's worth 82 cents a day. I feel like a 300% gain on that stock that he's talking about is definitely worth 82 cents a day.
Stocks list. There's other sites like highshortinterest.com. I like to look for small to medium-sized companies with small floats. So all things being equal, the fewer outstanding shares a company has, the more effective a short squeeze is going to be. Now, the big software stocks, they're getting hammered right now, and hedge funds are beginning to short them, but for good reason. Last month, Anthropic released an upgrade to its AI model, Claude. Claude gained industry-specific plugins and the ability to coordinate teams of autonomous AI agents. Translation: why pay $50,000 a year for enterprise software when a $20 a month AI assistant can do most of the work? And the response has been full-on panic. Microsoft lost more than a quarter of its value. Oracle got obliterated. While the S&P 500 sits within 1% of all-time highs,
and this is really interesting, right? These big stocks that had big moves for years that everybody just got used to just buying them, they always go up, have been totally monkey hammered. Like Microsoft. Let's go over to Microsoft real quick. This seems like an impenetrable moat, right? I've seen that on YouTube a lot. An impenetrable moat Microsoft is. Yet it's been in a terrible, horrible, no good, very bad stage 4 downtrend for a minute. Sell signal came. I have to zoom out to see how far back the sell signal came on OVTLYR. Look at that. November 5th. That's what's marked on here. Now, not only did OVTLYR show you that 300% gain, but it also kept you out of a 23% loss on what was considered one of the safest stocks in history, right? Just buy Microsoft. It always goes up. It's crazy.
Software sector has collapsed. Now, by the way, if you're sitting there thinking, okay, cool, but how do I actually take advantage of this? That's exactly why I started my Black Ops trading service. For just $5 a year, you get...
I have to fast forward through this.
How to spot these in real time for the whole year, looking at the software as a service business model and saying, I can do this cheaper, faster, and I don't take lunch breaks. So hedge funds are betting against them at record levels. Now, in this case, I think it's for good reason. The market is priced in perfection for the tech sector, and a lot of these companies need to be brought down to reality. So this is not a good place to look for short squeezes. Plus, these are $100 billion companies. It would take an enormous amount of capital to punish these short sellers in any meaningful way. Instead, here are 3 stocks that could do very well. Each has high short interest.
Dude, let's go.
A relatively small float and a stock price near its highs. Number 1, Solaris Energy Infrastructure.
All right, let's start with SEI. Let's go to SEI. So, of course, he's looking at short interest data, things like that, things that I personally don't, and that's fine. Everybody has their own style of trading. What I see right now is it just started a bullish trend, right? This is in the energy sector. The energy sector breadth is not bullish here. We actually have a bearish amount of breadth going on in the sector. However, the sector is getting really greedy. Look at that on average on the sector. The stock just started a bullish trend, like I said, still sitting on a buy signal. It might turn because I see down here that the fear and greed has turned from fear headed more towards greed. And in fact, let's just double check that we don't see any other OVTLYR blocks on top of SEI. No, it's actually cleared all order blocks right here, but it does have earnings. Keep that in mind. Earnings are always a gamble. So one of my favorite trades is actually trade up into earnings, right? Trading up into earnings. Come on, Clicky. Trading up into earnings. I don't know if it's going to do this or not, but I love trading up into earnings. However, I will never hold through earnings because that is a huge amount of risk on the table. So SEI, by all means, if that looks like the right candidate for you, go for it. Not necessarily for me, and that's okay. Everybody needs to come up with their own trading plan. Let's keep going.
Ticker SEI. Solaris provides industrial-grade, rapidly deployable power generation. Their biggest clients, data centers. As these data centers continue to put a strain on the local power grid, Solaris offers a quick solution to keep them running. They are perfectly positioned for the AI energy bottleneck. SEI stock has been surging. It's up 600% in 2 years. Currently,
I don't really care about 2 years. I care about like what's happened recently. That's what I care about. Let's see. Because remember, all stocks are bad. All stocks are bad. And we're trying to run them as they're moving up in the big, beautiful uptrends and avoid choppy, ugly sideways movements like this, right? In fact, let's do this. Let's skip forward because I really don't care about all that history lesson on it.
Stock number 2, TeraWulf.
Okay, let's go look at Wolf. By the way, sick ticker symbol. I love it. Wolf. All right. Look at this. Okay. 9 of 9. 9 of 9. Green lights on top of green lights for TeraWulf. I love it. You got the sector that's on fire. In fact, let's break this down. This hits the 40-30-30 rule. 40% of the move is due to the market. 30% of the move due to the sector, and the last 30% due to the stock itself. You got everything lined up here. 9 of 9. And you've got the fear and greed in the sector running up higher, looking great. You've got the bullish crossover on breadth. That looks great. Then you've got a buy signal that just happened, looking great. Inside of a bullish uptrend, looking great. Dude, I'll howl for the wolf. Ow! Also, earnings coming up. But yeah, and new all-time highs on this. I actually really like this one. Do you have a hard sell date when trading into earnings? That's a great question. For me personally, professional investor here, I will trade up to the day of earnings. So if it's, let's say after the close, I'll trade that day. That's fine. If it's the next morning, I will close the day before, right? That is a huge amount of risk that I'm not willing to take. The objective here at all times is to reduce risk, right? And if it runs up into earnings, which happens quite frequently, that's a great trade to take. Okay, we're going to skip forward again. I am a little bit time constrained today. Let's go to this last one.
Finally, there's Tango Therapeutics.
Let's go Tango with Tango. TNGX. Oh no, healthcare stock off the table. I will never trade healthcare stocks. Reason being is because at any moment in time, Tango Health Therapeutics, right? I don't know what they do. Doesn't matter to me what they do. But let's say that they're testing a GLP-1 drug, because this happened to me last year in VKTX. They released their results about the GLP-1 drug. They're good results, but not good enough. The market monkey hammered it 43% overnight. Again, the objective here is to reduce risk. Healthcare is all the risk all the time. Okay, no thank you. But it is sitting on 8 of 9, right? The only thing that's not working for it right now is the fear and greed in the healthcare sector is moving a little bit more fearful, little bit more, not a lot more, just a slight tinge more. But other than that, yeah, 2 out of 3 of these I actually think are very viable candidates for you if they fit in your trading plan, TNGX. But of course, oh wait, there's a hidden order block we didn't see right there. A hidden order block. Tell me order blocks don't work. Tell me order blocks don't work. By the way, you can get these exact same order blocks 100% for free in our Discord. You can make your trade set up exactly the same as mine. So you never have to worry about where's the support, where's the resistance. Right here, the resistance, November 2021. These trapped buyers are anxiously waiting to get out of here as fast as possible. Tell me order blocks don't work. This very random spot on the chart, there we go. In fact, let me make that a different color. This very random spot on the chart happened to have the very first time it came up into here. What happened? Anybody got an idea of what happened? Starts with monkey, ends with hammer. Very first time it came to this absolutely random spot on the chart, the monkey and the hammer came to town. The very second time it came up to this absolutely random, no possible way it could be resistance spot on the chart, the monkey came and hammered it back down again. Tell me order blocks don't work. Good luck. Boom. And then several other candles tried, also monkey hammered back down. Those sellers want to get out as fast as humanly possible. Guess where we are again? Now, again, there could be enough buyers to push through this and it goes up higher. I don't know. But I got to tell you one thing. This is overhead resistance that is very, very, very strong. The last 2 times we came to this area, what happened? 56% decline, followed by a 48% decline. Could that happen a third time? Totally could. Not worth the risk, in my opinion. Again, you can have the order block set up on your chart. You just go into our Discord and you got the link right there, totally free once you're an OVTLYR customer. So of the 3, I take it back. Not 2 of the 3 I like, 1 of the 3 I like, Wolf, because there's no possible way that I would take this trade right here. Even with 8 of 9 on the board over here, no way. So listen, this has been fun. I got to run. Thank you so much for coming to today's video. I hope this was interesting. Be sure you share this. And if you're ready to save time, make money, and start winning with less risk, click one of these 2 videos. Have a fantastic day. We'll talk soon.